What if I told you the worse the economy gets, the richer the stock market makes you? It sounds crazy, right? But that's exactly what happened across global markets this week. Let's break it down in under 2 minutes. The biggest story is in the United States. All week, we got signs the job market is cooling off, and manufacturing has now been in decline for 10 straight months. Normally, that's terrible news, but this time, the market loved it. The Russell 2000, a key index for smaller American companies that are more sensitive to the domestic economy, shot up 5.73%. So, what's the logic? Investors are betting the Fed can engineer a perfect landing. But with manufacturing in its 10th straight month of decline, they are ignoring the risk that the runway is about to disappear. And this strange disconnect is happening everywhere. First, Europe. Germany's industrial engine is unexpectedly roaring back to life, with factory orders surging 5.6%. And across the Eurozone, headline inflation finally hit the 2% target. But look closer, and the price of services is still stubbornly high, creating a major policy dilemma for the European Central Bank. Next, Japan. The stock market is booming, but it's a rally built on a falling yen and falling real wages, what people can actually buy, which dropped another 2.8%. This puts the Bank of Japan in an impossible position. They want to hike rates to normalize policy, but how can they squeeze an economy where the average worker is getting poorer every month? Finally, China. A speculative frenzy over artificial intelligence sent market turnover soaring to 2.8 trillion yuan, with traders borrowing money at near record levels to chase the rally. But it's a bubble masking a huge problem. Producer prices, what factories charge for goods, have now fallen for 39 straight months. That's the sign of an economy trapped in a deflationary spiral, which is notoriously difficult to escape. This all leads to next week, which could change everything. All eyes are on Tuesday's U.S. inflation report on January 13th, followed by crucial retail sales data on Wednesday. A hot inflation print or a collapse in consumer spending could instantly shatter the market's good mood. From Washington to Tokyo, markets are running on one single hope that central banks will cut rates. But they're ignoring the underlying sickness: recession risks in the United States, sticky inflation in Europe, and chronic deflation in China that those rate cuts are meant to cure. If you want your weekly dose of what's really moving the global markets, make sure to like, share, and subscribe. And for a much deeper dive, don't miss our weekly AI-powered podcast dropping right here on our channel tomorrow.